Hey guys, time for a quick market update. And the moment that I'm recording, NIO's up almost 2% in the market now, but now meeting also this downward trend resistance here, so needs to break that. But I would argue that there is likely a way that NIO can actually continue to outperform. And that's if I'm looking at, for instance, some of these paired rates here. So this one is Apple versus NIO, the performance. So what you can see here is that Apple outperformed NIO in the last couple of weeks and months. So you will see that NIO is losing ground here, had a quick recovery, but now is actually back to previous lows. And this yellow line that I indicated here is kind of the recent bottom in terms of how NIO is comparing to Apple. And this graph tells me that it seems to be a bottom forming here in this relation between Apple and NIO, and that may likely bring a bounce back for NIO to outperform against Apple in the next couple of weeks. Because actually I've been talking about this previously, that Apple may hit a top here, and in fact it looks like for now that it did, bouncing off this resistance line here, and may continue to have a little bit of a correction, maybe after the iPhone event, who knows. In general, I have disclosed before that I have actually bought some puts here as a hedge in regards that if the overall US indices are going down a bit, I think that would be led by companies, big tech like Apple, who have gained quite a bit of investment or upside 25% up since June. So I think there is potential for some correction here. But back to the pair trades, we see a similar pattern if we compare Tesla to NIO. We also see that NIO is now down to previous lows compared to Tesla. So investors have invested more into Tesla previously than into NIO, and I think this may also indicate a shift back into NIO, maybe growing stronger than Tesla here in the next couple of weeks. Same here. Li Auto has outperformed against NIO, but now it looks like this is once again a bottom compared to previous trends here. And so I would say there might be an outperform of NIO coming in relation to Li Auto here. It's less likely that it will actually decline further. And last but not least, we can also see this pattern in NIO versus Xiaopeng. So usually NIO has been trading against Xiaopeng in this area, up and down here. But now more recently, XPeng has kind of outperformed NIO here. But in terms of that, this resistance here gets broken in an uptrend by NIO, that could propel NIO to outperform against XPeng in the near-term future again. So these are mostly technical signals there. Of course, we need to have fundamentals to back this up in terms of positive news, or also that we see that NIO is likely to get back on track, for instance, with deliveries. But then I think there is reason to believe that we also see a flip back of investors into this kind of pattern that I've just shown. But there's actually more to it also on the macroeconomical side. So what you can see here, for instance, is that the white line is the S&P 500 has dramatically outperformed the rest of the stocks like the MSCI, excluding the United States. So you can see this was possibly lots around also the China sell-off and so on. But at some point in time, I'm expecting this to flip back, because there wouldn't be more opportunity to be found in some of these US stocks. And I think then once China has de-risked in investors' views, I think that is likely to generate a flip back into perceived undervalued stocks in China. What would need to happen for that? Well, of course, better relations between the US and China, and we're seeing the first sides of that emerging, like Xi Jinping and Joe Biden finally engaging in talks again. And it seems they agree that they want not to escalate this competition into conflict. It should rather stay healthy. And so this may also result in further improvements in the China-US trade war. And also both sides seem to start tackling the issue around delisting Chinese stocks. So we had official Chinese bodies coming out and saying that they want to continue listing overseas. They want to start complying with some of the overseas oversight terms and conditions by the US, by the PCAOB, and so we can expect that they try to find a compromise there. So that would be another signal, obviously, which could reinstall trust in US investors going into China. Also from the European side, there are more interesting and important dates coming up here. For instance, here the EU Commission's assessment of EU-China relations, as well as later the EU-China summit. These are important points after which possibly investors redefine the risk assessment regarding Chinese stocks. And so these are the signals that I'm looking for, and possibly investors are going to be quite smart about it and kind of anticipate it and act before the actual news is out. That's why it's often the right thing to do to kind of invest in a contradicting way in terms of if there's fear, buying the dip; if there's too much hype around something, start selling it off. Then let's talk about another stock that I'm holding, which is Xunlei, ticker symbol XNET, and yesterday had a big down day, like more than 10% at some point in times. And yeah, I'm still holding to this stock. I think the main reason why investors are selling it off currently has to do with the fact that Xunlei, which is a CDN provider based on peer-to-peer technology, so it's kind of a hybrid internet acceleration technology that they provide, and some of their clients are, for instance, live streaming platforms like Bilibili, iQIYI, Huya and Douyu and so on. And these companies are currently targeted by the gaming restrictions, which are not news in China actually, because previously Tencent was forbidden to publish new games for many months, I think during 2018. Afterwards, the stock recovered really well, and Tencent survived this phase. And what's also interesting to know is that usually the Chinese netizen, they have ways around such kind of bans of not playing more games than 3 hours a day. And I would also argue that streaming companies like Huya and Douyu, in which I, by the way, have no position, that they are actually maybe legal multiplicators of gaming time. So I am not quite sure if they will actually be hurt as much on the business side than, for instance, a real gaming company that is relying on releasing new games. And so I'm not quite sure if the impact on Xunlei's CDN and cloud business for these companies will actually really be impacted. Some of the other names like iQIYI and Bilibili, they don't depend so much on streaming content related to gaming. And actually one of the key value propositions of Xunlei there is that their CDN is claimed to be 50% more cost effective than traditional CDNs. And so in a case that these companies are facing hardship, then they need to save cost, obviously, and then a solution like Xunlei's CDN would actually be more preferential than traditional CDN, and so that could bring them actually more business. And so I would see this downside here as quite irrational. There are also other fears out there that some of the state-owned enterprises and government bodies need to not store their content on public clouds, and Xunlei is also providing such kind of a file sharing and public cloud services. So that might be another reason why investors are currently fearing investing in Xunlei. But once again, I think these are not the real big clients of Xunlei. Xunlei is mainly selling to private consumers, and so the impact shouldn't be too big on that side. And actually, I think we see that, for instance, BlackRock is accumulating Xunlei, although at a quite low level. But still, if you remember, BlackRock actually called for increasing their positions in Chinese equities, or for investors generally, all about rethinking their investment strategy and acknowledging that China is not a third world country anymore, and that actually needs to be a bigger alignment in overall portfolios by investors. So I'm not losing my trust into Xunlei here based on such kind of rumors and fears out there. I'd rather look on the fundamental aspects. And by the way, I've just done a 1 hour deep dive into Xunlei financials. So if you are interested in that, consider joining my Patreon, where you can watch it. It's including my business case and my price targets. And by the way, also I've just yesterday discussed like how big my portfolio allocation to Xunlei actually is. Last but not least, good news from one of my holdings here, Uptech Fintech, which is Tiger Brokers, and they have just released their quarterly earnings report and are now up 15 or actually up to 16% right now in the market. So that's great to hear. Although I think on the fundamentals, I think the expectations of investors were even higher revenues as well as a smaller loss than actually what Tiger Brokers was showing here. But I think they were possibly quite excited about the growth of Tiger Brokers overseas, and that's also why I currently am only long Tiger Brokers and not long Futu anymore. I've sold out of my Futu position because I think that Futu is reaching its valuation potential and has kind of a limited upside there. Not saying it's a bad stock or something like that, but I just think there is a bigger upside on Tiger Brokers. And I personally am also a client of Tiger, so I have signed up with one of their accounts and using it just for fun a little bit to experience their great user experience actually. And it's the interesting thing with them is that it's built on interactive brokers, and I think that's also giving them a little bit of an edge here because it's actually built on this interactive broker backend, and that of course should help scaling in the West. So yeah, that's it. The most important things to cover right now into the market. Stay tuned for more content and thank you guys for watching. Please don't forget to smash a like and then see you on the weekend.